Alrighty, good morning, ladies and gentlemen, everybody, boys and girls. Thanks again for tuning in. Do appreciate it. So another slightly red day in the market. Wasn't terrible. Ultimately, we really didn't drop by too much yesterday. So we tried to bounce, still failed briefly. Ultimately, closing the day red by a little bit. So we're still at some levels of potential support right now on the market that we're going to be keeping an eye on. But ultimately, still we have not seen a bounce just yet. CODX, yeah, you could follow CODX. I probably wouldn't really focus too much attention on it today. Yesterday was a really good moving day. If you missed it yesterday and you're going in following it today, you're probably a little bit late, or just don't really get your hopes up too much. Probably going to be a good bounce on it, maybe a good short. Intraday moves will probably be there. But again, after having such a big move yesterday, to see another really explosive move today would be really impressive. It has been moving impressive, though, lately. I got to say, it's really been moving quite unique, too. We've seen a lot of strong days out of the stock. So, yeah, I think ultimately could see some good intraday moves. As explosive as yesterday, I'd be kind of surprised, but yeah, why not? Give it a follow. Yeah, I mean, you have to have a dislike in there. Of course you do, because, I mean, but that's okay. I mean, that's what makes the world go round. As bad as it sounds, you need people to not like you, and you need people to like you. Just like you need to have rich people and poor people. To make rich people, you need poor people. In order to make a poor person, you need a rich person. So you can't have one without the other. So as bad as it sounds to be ultra rich, and as bad as it sounds to be, but you kind of need both in actuality. I know. What can I say? So with that being said, ladies and gentlemen, let's just quickly take a look at the market. I don't have it up on this screen, but just know that we have a 200 moving average down here. That right now, it's not on this chart because I don't have it up on this chart specifically, but we do have a 200 daily moving average right at about the price that the market's at currently. And we also have a lower deviation level there as well, where we might be able to argue that we'll get a bounce. It's up for debate. But ultimately, we still, if you're really looking at price action support, you're someone who's probably going to be following the market pretty much anywhere from like this zone to this zone, looking for a bounce. If you're someone who is looking for standard deviation bouncing, then you would have been watching yesterday for a bounce and also for the 200 moving average bounce. Arguably, we're still at a potential level of having a bounce right here at about the 307 to 306. So again, for me, I can't really justify jumping in short on the move. I would myself wait for like a bounce or a retrace back up if you wanted to get short in the hopes that the markets do continue down. That would be my first initial thought process there. Okay. They have a mask for the coronavirus, going to be keeping it for a second, in my opinion. So let me take a look at CODX, and I see a lot of people are definitely head over heels about this for right now. So it's still going up right now. Let's see what else they got. So if they have something to do with the coronavirus, wow. Yeah. That's pretty interesting that they did a direct offering and still going up. Yeah, I think that's very interesting. Yeah, it looks like the company announced a 4.2 million registered direct offering priced at market of $9, and it's still going up. Very interesting. And let's see, 714, having about 714, so it makes sense. Yeah, that's very interesting. Yeah, I would keep an eye on this today. Again, it's hard to say that it would have as big of a day that it had yesterday, even today. So I think it's worth following. If we do just a trend line pretty much through the price action of everything, you're going to be on the high side of the move, right? So if you think about it, you're on the low side, you're on the high side, sell into, you're on the low side, buy, you're on the high side, sell into, you're on the low side, buy, you're on the high side, sell into. So right now you are on the high side of the move for CODX. Could it go higher? Yes, but you are starting to be on the higher side of the cycling move on CODX right now. Okay. Yeah, so if that's the case, then yeah, if they have something to do with the coronavirus, which it looks like here, and again, I didn't even trade it yesterday. I think I looked at it briefly, never ended up trading it. But yeah, if they have anything to do with making the mass, then you could argue. So it's definitely a short-term sort of trading pump, just like most penny stocks are. But yeah, good to follow. All right, yeah, I can get behind that. Yeah, that's what I'm saying. Is it looks like they literally just did an offering and it almost had zero effect on the stock, which is what I said was the impressive thing, right? They literally just did an offering and they're still not getting rocked, which is pretty impressive. That tells me that it seems like there's a lot of hype and a lot of momentum behind this, and that maybe you should keep it even on watch today with maybe as big of expectations, right? I don't want to be the one to say don't look at it or do look at it. If you think it's going to rip, go ahead and look at it, follow it. There is a lot. I mean, everybody knows the coronavirus is being talked about pretty heavily. If this does continue to get more hype and more momentum, yeah, you might be able to argue that CODX might continue running. I would wait a little bit. I would definitely, I mean, right now you can already say to yourself, this is not the right time to buy. If you just go from a cyclical trend standpoint, you're on the high side of the trend. So for right now, it's definitely not a buy, in my opinion. And I would wait on some sort of pulling back fashion. If I were long CODX right now, I would be taking profits. Absolutely, 100%. I'd be selling into this move, right? That's what I mean. Is if you got to look at it from the standpoint of you're definitely not the first, right? So if you look at back where it started, all the way down in 69 cents, insane, right? So from 69 cents to 1080, I'd be selling it. Absolutely, that's a bubble. You've bubbled out, right? You're a hockey stick. So this is going to crash, and ultimately, I would not want to be the one buying it up here, right? Because when I look at where it was, I'm definitely getting a terrible deal on the stock. And that's what would keep me from buying it. Okay. Why did it get halted yesterday? Probably for volatility reasons, I would imagine. Most cases, a stock would get halted due to volatility reasons. TNXP is going to rocket at open. Let's take a look. Yeah, yesterday, was it yesterday that I said maybe not to follow? Was that the one? Was it TN? No, I don't think it was T. It was something else. I think. I could be wrong, but. Well, TNXP has up to $1.6364 before it hits resistance. So, yeah, does this have anything to do with coronavirus? Yeah, they're developing a vaccine, blah, blah, blah. Okay. So, yeah, this is pumping up off the coronavirus news. So, this is going to be a short-lived thing. What I will say is if you look at the chart, you have a gap to fill here from $1.11 to about $1.54 to $1.60 area. So this gap has been filled, but how is the price action looking right now? The price action's holding over the gap fill level. So this could tell you that maybe the price wants to continue through the gap and actually continue squeezing up or squeezing out. So this actually could be a good candidate, also based on the way that it's sitting pre-market, where we've gapped up and over, and we're kind of holding over that gap level. So it's kind of impressive the way that it looks. Let's see. On the background of your Thinkorswim, I have a blue background and can't seem to get it changed. You go into chart settings, you just go into chart settings, you go into appearance, and then it's right there. Yeah, background, you could change it to blue, and you can change it to black. I need to change it back to black. Yeah, okay. REGN is now a bubble. Well, government market makers. The market never makes it easy on you to do anything. That's just a fact. I'll take a look at IBIO. I'll take a look at AMD or AEMD. IBIO held consolidation, broke out yesterday, so that's going to be way outside the norm. So probably more of a sell right now. Yeah, I would say probably not a long. It's already kind of squeezed up into its resistance, so maybe in a couple days. But I probably couldn't justify looking for a big long play over at 50 cents right now. It could, but probably not. I'm just gonna go with no. I'm never gonna say that anymore. I'm just gonna go with no. It's just not gonna break out. If it does, you got lucky, or something out of the norm happened today, but probably not on IBIO. That is called expansion area. So you got to go to your chart settings. You're going to go to, what is it? You go to chart settings. You go to time axis, and then you're going to change expansion area. Any option play? So no option play. I mean, the only option play I'd actually be interested in would be shorting the market after we bounce. That's pretty much it. That's probably what I would do. If there's any sort of big option play, it'd probably be like getting short on the market. But no, it's basically about it. And that's the other thing is, everyone's like, are you looking at an option play? An option play is just a stock trade. That's all it really is. If you think about an option play, so when everyone's like, what kind of options are you looking at? If really an option is the same thing as a stock trade, because options are bought on stock based on movement. So as long as you understand movement of a stock, then you can just buy any option around any sort of move of any stock that you think is going to have, and then there's your option play. So the way I look at options is, it can get a little bit deeper than that, but ultimately, if you're buying an option, you're buying it on an ETF or you're buying it on a stock. So it's really not what option player you think. It's more about what stock player you think. And the only play that really, I guess you could say, is big is I would be looking at the SPY right now. In the last RSI video we did, we basically called for the correction in the market and on AMD. So we called for the correction in the market. I didn't get short that. And I've been waiting for this bounce because I want to see how this bounce works. I want to see how weak it is, how strong it is. But that's where, if anything, I'd probably look at getting short there is maybe on the retracement bounce. Because after the retracement, that's where you can get a lot of times a harsher drop. A leveraged stock play. Yeah, you'd be a leveraged stock play. So you're saying the GILD price target of 80. So yeah, that's, I mean, yeah, I guess, depending on how you're looking at it, yeah. Yeah, GILD is working nice. After the other day, it kind of squeezed up. We said not to get long. It'd be your first attempt. We ended up going red. And now that's working well. So that's important to pay attention to GILD. We've seen it kind of break up. And now you're starting to see this stock moving against market direction, right? So yesterday was kind of bearish in the market for half the day. And you're starting to see GILD moving the opposite direction. And we looked at this on a longer term chart the other day. Somebody had mentioned and said to look at GILD, and then ultimately I came and eventually looked at it. And if you look at like the big chart on this, it's pretty bullish, right? You're just kind of starting to come out of big, like, downturn, right? So you can very well argue that that's going to have a nice move up. More of, I would say, maybe a little bit of a longer term play, but, we'll see. A lot of volume coming into it as well. John, I would say probably, well, you know what? Yeah, that's, yeah, absolutely. You could say that. The way I look at it is whenever you say that the economy is really good and everything's really awesome, then you just basically describe that you're at the top. When I describe an economy as picking up, things are starting to turn around, I would say that that's a strong economy because you're actually seeing the change from weak to strengthening. So you're going from weakening to strengthening. When you're strong, you're at your best, and then you only are going to go downhill from there. That's the way I see it. And I don't know, it might have been last year. I think last year, President Trump was talking about having one of the highest GDPs ever, or one of the highest. Yeah, so I can't remember exactly what it was, but I think just, whether it was Fox News or Trump or the media or whomever was really preaching this extremely high GDP, and all I could think was, that's just the dumbest thing you can do, because all you're doing is preaching to everybody that you're at the top, because I think it was even 4% or something, like 4% GDP or something like that. But I was like, you're literally preaching you're at the top, and for you to be able to perform like that next go around is going to be nearly impossible. So you're basically preaching this 4% GDP that you're almost never going to be able to reach again, at least in this short macro time frame. So you just basically told everybody that's the best you're going to get. And as you can see, we've tapered off in GDP since the last year. So again, the way I look at when it comes to the economy, if everything's booming and everybody's out partying and having drinks and eating dinner and spending money and going on vacations, that's the best the market's going to get. I mean, what more can you ask for? Everybody's living their best life. That is usually once you've reached the peak. And we've been in this phase of everyone's buying homes, everyone's buying new cars, everyone's spending money, everyone's going out to eat, they're watching movies, they have Netflix, they have pretty much everything it seems like a lot of people really desire for the most part in life. I mean, some people don't have everything, but we've been living a pretty good life economically for the last couple years, right? And especially the last 2 years. And so that's what tells me we're at the top. When I go and I drive around and I see construction going up everywhere, we're at the top. When construction is at its best, we've reached the top of the market. That's how you know things are getting overdone, is the way I see it. So we'll see. And that's true. That is very true. We could see the markets higher after the end of maybe this year. That is only if. Basically, the way you would see the markets higher is if you 100% predict that for the coronavirus, that pretty much nobody starts dying, nobody takes time off work, and that's it. I mean, that's the only way the markets could go higher, is if this all just bypasses us in a couple weeks. Because we're already basically through the first quarter of 2020. The virus is really just beginning to spread. So if it continues to spread, you're going to go into quarter 2 of 2020, then 3, then 4. You could see 4 terrible quarters of growth for the next year. Very possible. And if you do, there's no way you're bouncing back at the end of the year for that. So basically, unless this all just stops in the next couple weeks and supply chain gets back up and running in China and everything gets back up and running the way it was before this happened, then you're not going to have a bounce back before 2020. It seems very, very unlikely. Right? And then you see how then that's what I was saying, you see how the snowball effects. I think I've already been seeing news of schools that would close down, and we talked about that. If schools close down, parents aren't going to go to work. If parents don't go to work, then they're not making money. If they're not making money, then they're not spending. If they're not spending, it's just a big snowball effect. So we'll see. We will see. Yeah, so, but that's my opinion. This is my personal opinion. Is I just really, truly don't believe we're in a buy the dip market. When yesterday or maybe even today, where I'm kind of talking about the potentials of these bounces, these are just, in my vision, it's just short term couple days where we'll go up, 1-2 days where we'll have the markets bounce, but ultimately, hell, you guys already know I've been a bear for 2 years. Basically, ever since since the first kind of big corrective down spike in 2018, the start of that was actually really basically the start of 2018. We had our first big pull. Then 2018, we had our next big pull. That's where I basically said to myself, the market's getting overdone. You wouldn't have those sort of back-to-back volatility corrections if there wasn't some sort of maybe underlying scare in the market. And that's what started giving me the sense that we're overbought, and that this last push over the top was our off the top squeeze, our last parabolic market blow. and now we're getting ready to top. So I think ultimately we're going to have a bad 2020. Yeah, so we'll see. Enough of the scaring, enough of the fear mongering and all that. But yeah, GILD long-term chart actually looks very well for like kind of a longer-term play potentially. How we're kind of coming up and out of those channels. Let's see. REGN, you shorted it? Let's see. Yeah, REGN's definitely not a bubble. Definitely not. Let's see. I don't even know. Is this, that's probably some type of pharmaceutical. J&J is still performing well. I think J&J shut down most of their not shut them down, just allocated much of their factories and supply to finding the cure for it. But REGN, I mean, I probably would say it's, I mean, you do have a gap to fill there. I could see that. You do have a gap to fill in REGN, but ultimately, I mean, well, you do have a slight divergence. So looking for the bear signals, you do have a slight bearish divergence going into the high for today. It's very, very slight, though. Probably not enough to really get you all hyped up about a short. Yeah, I don't really see any reason to be short on that for now. You are probably a little high in the cycle, so you probably have that going for you, but actually, you're really not. I mean, you're kind of just on it. Yeah, I don't know. I got to say that I probably wouldn't be short myself. But yeah, I could see that being a COVID play. The SPCE downgrade, I did not talk about that, but we were kind of mentioning to be bearish on it yesterday. You got to be short bias on that, not long bias. And you can see it's pretty much gotten wrecked. You know, it's just another one. I didn't say it. Nobody said it was a bubble. You know, we just kept saying buy it up, just keep buying it. You know, that's what we were saying. It was just gonna go forever. But again, another perfect example of a bubble that popped. It was all hype. I mean, again, when you looked at the financials of it, just so you know, if you took the time to look just slightest bit into the financials of this company, not that I'm a genius, but literally, if you looked into the financial report, it would tell you that they don't make any money. They make nothing. When we talk about how they make money, they literally make nothing other than like investment money, which comes from other people's pockets. They literally don't sell anything. They don't have any products to sell. They don't have any services to provide at this point. So they really make zero money. So to expect that was just going to... So you're really just investing on 100% speculation. That's it. So, no. Also, if you look at Tesla's not doing so good. That's starting to fade out a little bit more. We're starting to see a lot of sellers pile in on that. Definitely the market's moving down helped a company. This big move down, yes. But we know it's very overvalued, and we know that you have a lot of gaps to fill here, and we know that the true buying price that you could really justify being long at on Tesla really comes in around like this kind of like 650 zone right here. Like that's the true kind of level to buy off, is like right into this zone, right? So again, I'm still following Tesla, and I probably would maybe justify getting long on it if we get down into the 650. I would not be purchasing any shares from anybody who's selling any of their shares around the $1,000 price. I am just not going to be foolish enough to take those shares for $1,000 off your hands when I know the real value of them on trend is down at about 600. You can sell those to somebody else. So we've seen an extreme change of wealth on Tesla. Tesla's big move up caused for an extreme transfer of wealth through hands from knowledgeable investors to unknowledgeable investors, without a doubt. Okay. But anyways, I got to run for the day. I got to get back to our private group. Anyways, with that being said, ladies and gentlemen, everybody take care. Have a good rest of your day. I think today is going to be ultimately, again, a day where you follow the markets. As long as the markets keep trailing down, many of your stocks are going to keep trailing down as well. All right, so everybody take care. Have a great rest of your day, and I'll see you guys in the next video.